look at that bid in the long end of the curve, this has been a painful trade for the past year, but now seems to be a little more certain to many investors. What is it saying, though? Is it telling you that growth is slowing, Priya?
I think it's telling you that the market's gone from being worried about the upside risk to yields because of either pro-growth policies on deregulation or taxes to those downside risks. But I would not go so far as to say that the market's pricing in significant slowdown. Because when you look at the end point of where the Fed cuts are being priced in, that terminal rate that we look at, 3.5 is where the market's saying that the Fed might stop. The Fed's own estimate of neutral rate is around 3%. I think that's fair. So the market's actually saying the Fed will still be restrictive. I think that's the inflation or the stagflation aspect of the market that's priced in. So I think if we're going into a recession or forget recession, slowdown, 1% GDP, the Fed's own forecast, I think they're going into accommodative territory. So there's a lot more for that 10-year to fall if we actually start to see the hard data, which has been robust, resilient so far. If you start to see the hard data roll over, I think you're going to see much more of that move in the 10-year.
What is the 10-year telling you, Jerome?
Ultimately, it's showing us that the market is concerned about the journey. And the journey is effectively not saying what the destination is going to be. And secondly, it's basically saying how long is that journey going to take. So for the Federal Reserve, the inflation discussion is incredibly important, and they're going to maintain that optionality with regard to how they want to think about that for the next meeting, for the next year or so. What is interesting to me was actually in the dots, where you had 2025 where inflation really became a focal point, taking it from 2.5 to 2.8%. But as you look at the future, that inflation really wasn't a concern. And hence, you heard the word transitory again. In my ear, when I hear that, I think optionality for the Federal Reserve to manage policy, et cetera. So as an investor, that inflation discussion is incredibly important. It wasn't so long ago that Jerome Powell and company were actually pointing to inflationary expectations as being something that was the anchoring point. Now they're saying, look through it. You have to reconcile that at some point in time. And for investors, the inflation discussion, at least for the remainder of Jerome Powell's term, is going to be very impactful to how the Fed decides the outcome of those dots in reality.